Foggy to start, but great to have the good folks we have here at the Big Iron Farm Show. My name is Don Wick from the Red River Farm Network, and we're just always feel blessed to have all our folks that come in and join us here at the show each and every year. Right now we're going to talk about this land market. The title of our presentation, Have We Peaked? The latest in the land market, and I think this is always a question of what's going on. Our guests today are all folks from Farmers National Company. Kyle is an appraiser, farm manager, handles real estate sales as well out of the Fargo office. Dale Weston is with us. Dale also handles real estate sales and appraising out of Fargo. And Troy Swee is area sales manager, farm manager with Farmers National Company since 2010. You're in Beersford, South Dakota, right?
Correct.
Down near Sioux Falls. So we appreciate having all of you on our stage today, and we welcome our online audience as well. We remind folks that you can catch all of our forums on yourliveevent.com. Everything is streaming. Big question. Kyle, let's start with you. What's happened in this land market since we sat at this stage 1 year ago?
Well, I'm going to use a word that sounds overdramatic, but I'm going to explain it, but the word is chaotic. And what I mean by that is the data. The sales data is just has been all over the board. And I attribute that to a lot of public sales, a lot of public auctions, and a lot of multi-tract public auctions. And with that, and then strong motivation. And with that, with online auctions that many of us are doing, we do a high bidder choice method with multiple tracts. And the results of that are kind of, in many cases, results that don't necessarily correlate to things you typically, quality. You know, when you compare this one to that one, it doesn't really make sense. And it all comes down to motivation and opportunity, which you can't always put a finger on. So it's been a very tough one to, as an appraiser, make sense of the data, because it's just kind of random.
I can very well imagine. Dale, I'm curious, you mentioned the online stuff. How has this business changed since really the advent of all the online sales and that part of the business?
You know, it's been about 10 years or so since we started using online services, and it just opened up that whole market to investor buyers and even locals that don't want to take time out of their day. Maybe they can bid from their tractor seat, you know, and not have to look at the neighbor eye to eye at a public auction. It's really changed the way land can be sold. You know, and I think it's a benefit to the seller. It certainly is, to have the more people we can get bidding on a parcel. That's going to usually be a good thing for the seller.
So Troy, Kyle used the term chaotic. We've obviously been trending higher in this market over a period of time. Have we plateaued, or where are we at today in this market?
That's a tough question to answer. I was talking to Kyle about that this morning. I think it really depends on your community and where you're located and how much stuff is sold in that area lately. I think if you have a great farm, a really high quality farm, high productivity index in an area that not a lot of farms have been sold recently, I think it's going to sell extremely well and probably almost right at those levels that we saw in the fall of 2022. However, buyers are a little more picky. If you're borrowing money at this 8%, some of these farms that have more blemishes on them, a few more wet spots on them, lower productivity indexes, maybe something with higher percentage of recreational property attached to it, those are coming down in prices maybe a little bit more than that really high quality stuff. But what's really kind of keeping the values up there, I think, is the lack of inventory. At least down, and when I look across the Dakotas, and I visited with, you know, internally when I look at our sales numbers and talk to competitors, everyone's talking about, you know, the number of sales compared to 21 and 22 are just not there. But it's hard to keep up that level of sales that we had, you know, for that same period of time. So just the total number of inventories are a little bit down compared to in the past. So when inventories are down, there's still a lot of demand out there, so there's still a lot of people looking to buy properties. The online auctions are extremely well attended still. We're still getting great turnouts for our simulcast and live auctions. And again, so when there's less inventory out there, the investment buyer, I mean, if you're a 1031 guy trying to get rid of some money, you need to start showing up at these auctions because there's less opportunities to get something bought.
You look back, like you said, last couple of years, you opened up Ag Week, and it was full of land sales. So that's shrunk. You're saying now, Kyle?
Yeah, so far. I mean, and you got to realize too.
We're on the front side of the sales season.
Yeah, we're on the front side. See, and we're selling land virtually 12 months. I'd say more like 11. You don't see many in July probably, but the sales season is extended. So yeah, those are getting, whereas you usually wouldn't maybe start to have a sale till October, November, whatever. Now, really with online, guys can bid, anyone can bid from a distance or from the tractor, combine, whatever. So it's spreading the season out. So yeah, but historically, yeah, we're still early.
Yeah, what about interest rates? What's that done to it? I gotta imagine that would have some influence.
Well, logically you would say yes, Don, but like our previous speakers were talking about, they haven't seen it yet. And I don't think we've seen it yet. I think there's a lot of excess cash in the farmer's pocket right now that if they haven't had a land sale or a land purchase, I should say, within the last few years, they've got the dry powder to make that purchase if they want to. So I think that coupled with, we're going to have, just like our previous speakers talked about, spotty areas of really, really exceptional crop. I mean, she was talking about wheat. I've heard some incredible wheat yields out in western North Dakota, 70, 80 bushel wheat, where they normally get 40, 45 bushel wheat. And what's a person going to do? They're going to buy land. The other thing that's affected on interest rates, in my opinion, is that we have to remember that land purchases are long-term interest rates. We had an inverted curve on our interest rates, so it was short-term that went up pretty dramatically. So in the whole scheme of things, and some of us are older than others, we can remember interest rates in the teens, right?
Yeah.
To me, the interest rates aren't such a major factor, and I really agreed with the comment on the panel before about if you've got land you want to buy, the interest rate should probably be one of your least concerns. It's part of your whole overall operation. And the other factor is that the Farm Service Agency still has some incredible interest rates for young beginning farmers. And we've seen an influx of young farmers coming back farming with dad. And we see this in a lot of our sales where we'll sell the land to the dad because he has the wherewithal, the bridge loan. Then all of a sudden you'll see a transaction in the recorder's office about 3 months later when they get all their FSA financing in place and it transfers over to the son. And I'm still hearing those interest rates extremely low, around 2% or so.
Yeah.
Yeah.
Hinging off what Dale said, I agree. What we've seen in the last year and a half, I've called it an opportunity market. As opposed to 10 years ago, the jump we saw, I felt like some of the buyers pushing the market felt like they had to jump on the train now or it was leaving the station and they were going to miss out. Like the trend line was still going to be there. My sense is the buyers, the influencers in the last year and a half, that wasn't a factor. It's the opportunity now. It may not be worth, it may correct in a few years, whatever. That's not the thought process. Like I have the wherewithal, it's the opportunity. I'm taking advantage of the opportunity. And the interest rates haven't been the biggest deal.
When you look at how big our area is and how many sales, yes, we've had lots of sales, but there's still lots of pockets that there hasn't been public sales.
Yeah.
Again, I talked to you, Don, this morning. I grew up in the Langdon area, and there's probably a 4 or 5 township area around where our farm is that hasn't had a public sale in over 10 years.
Wow.
I couldn't imagine what a public auction would do up in our area right now. It would blow the top off, I really believe it. But yet, there's still that feeling like, wow, with interest rates, commodity prices, land prices got to be coming down. Haven't seen the data yet,
I think that lack of supply, we always see that in Northwest Iowa, you know, because everyone talks about, you know, land bringing $25,000 an acre in Sioux County, Iowa. And one of the reasons of it is that generally there's only 1 or 2 sales a year in that whole county. Historically has really good yields, a lot of cash in that county. So when something does come to market, it's going to sell really, really well. And I think we're going to still continue to see that into 2023, even in the market that we're in, is that if you're in one of those pockets where you had good grain production this year and not much is sold, I think it's going to be, you could see fireworks at these auctions.
And that's where I caution sellers. And, you know, growing up on the farm, and I understand that loyalty of a tenant, and I'm not saying anything negative about that, but I don't think the average seller of land realizes how much money they could leave on the table by not testing the market publicly.
If you've got that piece of ground that's, you haven't had anything sell in your township for that long, you've been staring at that for a long time, you see some pent-up demand, I'm guessing.
The bidders will show up.
Yeah.
I've literally heard that comment, and it was because he had the chance to buy it privately, and it wasn't the greatest land, but it's like, I'm not gonna drive by that the rest of my life, knowing I had the chance to buy it and I didn't. So.
Still comes down to rate of return. And land still is an investment. You need to cash flow things. How do you see the cap rate, some of those kind of things, rate of return on farmland, Troy?
You know, one of the last speakers was just talking about this. I mean, it's come down a little bit over the years. You know, they talked about cash rent prices not keeping up. And I'm not sure at some point in time, I know we're going to discuss cash rents at some point in time, but when you take a look at the drastic increase we saw in our land values over the last couple of years, cash rents really didn't keep up. You know, we saw, you know, coming into 2020, cash rents were probably pretty flat. In 2021, we saw maybe a 10 to 15% increase. We saw that again, 10 to 15 increase again in 2022. But realistically, when you look at land values almost doubling over a 5-year period, we did not see cash rents even come close to keeping up with that rate. So we saw cash rents, or those ROIs, going from maybe hopefully into that 3% to maybe something down into, you know, very common in Southeast South Dakota. I'm at 1.9 to 2.3. You know, I mean, it's probably pretty common number we're looking at. So, I mean, it has come down slightly.
Certainly, we've had a drier season in this part of the state. We went through drought for a couple of years out west. I know you've been dealing with it in South Dakota as well. Drought or some of these weather conditions have some influence on these land values?
I believe they do. I mean, that's where I think we see, going back to Kyle's comment as chaotic, is that you're going to see those pockets. Again, there's going to be pockets that have extremely good yields. They're going to have excess money in their pocket, and they're going to buy land most likely. Whereas if you don't have that, you're probably not going to make that big capital purchase. However, back to the previous panel that was on here, I think our crop insurance has put a good support, a good floor under everything to kind of keep these prices about where they should be. You know, after the last run up 10 years ago, you know, commodity prices dropped in 1/2, and our land prices went down, let's say in good quality land around this area, 10, 15%. Well, that you know, isn't correspondent to each other. You would think it would go down more.
And I agree. Like us, I mean, like down in Southeast South Dakota, you know, so 3 years ago we raised probably 70% of what our APH was. 2 years ago we ran probably about 50% of what our APH was. You know, last year we're shoot for 200 bushel corn. We raised a lot of 50 bushel corn. You know, so we start going into the selling season, I'm sitting here thinking the sky is falling. You know what I mean? We're not going to see any good land sales because we're in an area where we've had 3 drastically below average corn crops, and we set all-time record highs every time we had a sale, even though the crop production was not where we wanted to be. Again, the crop insurance was there, but then you take a look at the government funding that we had for a couple of years in a row, coming with PPP loans and the COVID relief program. So the government funded a lot of cash, or funneled a lot of cash into these growers, and they're looking for a place to stick it, and farmers like buying land. And they said even in those pockets where they're not going to raise an exceptionally good crop, we can still have some very good land sales this fall.
Hope you guys involved, at least in the appraisal side. What are some of the factors you consider when you're appraising farm ground?
It's what the market is doing. You know, logically it would tell you it would be the quality of the land, the productivity rating, and the soil index, and yes, but ultimately, what are the buyers in that market doing? So that's a trick that we have to, decipher and analyze, and in some cases, that it's chaotic and it doesn't correlate to quality. I mean, it might be location, it might be just, I want it, so ultimately, and people, when they talk to me, they think there's like a book that you look into, almost like a hail adjustment, where it's like you look at a table, but ultimately is what is the market telling you? It might be, I can tell you in the northern Red River Valley, Grafton, Hoople, St. Thomas, Glendon, Silt, Loam, that's what brings the money and that's what people want. In other market areas, it's, a PI, well, across the board. We see people looking at PIs, and as appraisers, we know that is a drastic oversimplification of what's going on. Some of the, I wouldn't say the best land in the Red River Valley, but some very good corn ground in the southern Red River Valley has PIs in the 50s and 60s. I've had other people out of the area call and tell me, what's going on here? I see these sales. I said, that's good ground. It's just, the thing is, in North Dakota, the PI is based on wheat, period. That's it. So some of that sandy ground doesn't hold moisture and doesn't produce wheat, but corn can go down and get that moisture. So long story longer, it's what the buyers in that market, what are they making their decision?
Corn was a huge change in our state. It really was. Jerry Gulke was up here earlier, and he's got land in Dickey County. Dickey County was always soybeans and wheat for years and years. And when it got wet down there, I tell you what, the land prices really took a hit. Well, now you can see land prices in Dickey County that'll match almost what we're selling Red River Valley land, because they can raise 200 plus bushel corn down there. And corn made a total difference down there as far as land prices are involved.
20 years ago, when I first started appraising down there, you could buy all the land you wanted for $500-600 an acre. We had a sale west of Adrian in Lemoore County last spring, had another year of a lease on it that was probably at half the rent that it should have been. What did it end up being?
7,600.
$7,600 an acre. I'm going to go on a ledge and say that's the highest sale ever in Lemoore County. So that's 7,600 20 years ago, 500, 600, and it's corn.
Educate me, what is the purpose of the appraisal process?
Well, we do a lot of our work for estates, estate plannings, attorneys, and that sort of thing. People always assume that we're doing appraisals on purchases or lending, and so that's some of it, but,
I think with the estate tax potentially changing, like Jerry said, in 2 years, there's going to be some people here in the next year or two that are going to want to do some gifting and take advantage of the current exemptions. And I've seen an uptick in those type of appraisals too, because they want to move some assets and utilize the exemptions they have now at the roughly 12 million per person instead of going back to the 5 million.
You touched on rental earlier. What are some of the clauses? What are some things we should be mindful of when we're going through negotiating rents?
I guess I'll start with a couple things. I mean, first, we'd always recommend you use a written lease. I'm not a big fan of long-term leases. Anything over 3 years, any term over 3 years is probably, in my opinion, probably a little bit too long of a lease. I know with the rotation up in the Red River Valley's leases change on length more than they do in like Southeast South Dakota or just corn, soybean production areas, but always use a written lease. Check the information on your lease. It's not uncommon for us when we do farm management. We're picking up some of your leases when we bring them into our system. Legal descriptions are wrong. They're not requiring insurance from their tenants. Make sure your tenants are giving proof of liability insurance. And then the biggest thing we're finding not anymore is we're utilizing flex leases with our cash rents. So those were, I guess by show of hands, as people understand what flex rents are for the most part. They were relatively uncommon maybe 10 years ago. Now they're extremely common. I would highly recommend farmers, if they're not utilizing them now, go ahead and use them. We saw flex rents coming out of this area a year ago were almost equal to what the spring payments were. and our clients were asking us, hey, I think we got a mistake here because our client paid 2 years of rents in the same year. I said, no, your flex rent was just that big this year. So I guess that would be one thing to look at is keep an eye on what the markets are doing, what input costs are doing, and then consider using a flex rent in the future.
What criteria do you use when you're working on a flex rent?
What criteria?
Yep.
We usually base it on, it's based on production and a price. So if you can Google flex rents, and there's gonna be 100 different options you're gonna find on a Google search. The most common one that we use at Farmers National Company is we use the actual production off the property given to us by the tenant at the end of the year. Basically, it's what he gives to his crop insurance agent. We use this average price of the spring price of corn and soybeans. USDA sets a price in March and then set another price in the fall. We take the average of those two times a percentage. And if your base cash rent was $150 an acre, we put it on the equation, and the equation says it's $175, he would owe us a $25 an acre bonus come fall. So it's based on yield and price.
What term of a lease are you typically looking at? And has that changed any in recent years? Is it a 1 year, 3 year? What's
Yeah,
more common?
one to two, sometimes three. I guess for me, three, there might be beats involved or something like that. You know, but it's certainly, the thing is, you know, obviously you work for the landowner. Really not to their advantage to have a long-term lease. Even somebody thinks it's a very strong lease payment. Well, certainly seen it. That farmer walks away from it. The realistic thing is you're not going to do anything about it. You're not going to spend so. But yet, if you're low on that number, well, you're not going to renegotiate it up probably. So it's good to reset that every few years. It's nice with a flex lease because the idea that that floats along with the market. So just those are things to keep in mind.
I think that's exactly right. The flex lease has allowed some security for a landowner to have a multi-year lease. In the years past, if you would have went through and had a 1 year lease, or you signed a 3 year lease and you're the landowner, and some sort of watershed moment takes place, Russia bombs Ukraine again, corn goes to $9, cash rents double inside of 12 months, you know, now the landowner feels like they left a lot of money on the table, but on a multi-year lease. But if they had that flex rent provision inside of it, they're still going to realize that money. They're just not going to get their bonus till at the end of the year in December when that flex rent kicks in. So the multi-year leases are probably okay as long as we've got that flex rent attached to it.
Yep. And that's one thing when we were just talking to another one of our farm managers, you know, we're probably looking at a flat, you know, number going into next year as far as cash rent, but, you know, you might look at adding a flex lease if you don't have one to cover those bases in case you said a watershed moment you can't predict and adjusts and floats with the market.
When I visit with farmer producers too, and I encourage them, be upfront with your landlord on what the rents are. They might not want the top dollar, but they want a very fair rent, because a lot of times when we come to sell land, it's a landowner that's frustrated over the rent that they've gotten, that they felt like they've been shortchanged, and they don't want to deal with that. So the easiest out is to sell the land.
If there is a existing lease on a piece of ground, what's that do to the marketability of that ground?
When the market's strong, not much. That farm in Lemoore County that's over 7,600, I'd add another layer of lease on it. But as you add more years, it's gonna have an impact. And as the market moderates or thins, it's gonna have an effect. 2 years, I suppose we've seen it happen. I don't think I've handled it one with 2 more years on it, but you know, as you get longer, is whoever's buying it, you know, a farmer wants it to farm it. So, you know, and chances are that lease is not market.
Yeah.
Most of the ones
I mean,
that we
it's
sell.
uncommon for us to get something for sale where we know the lease or it's subject to lease where the rent is market.
So
It happens occasionally, but it's uncommon.
most of the ground obviously goes farmer to farmer, but what is the role of investors in this market today?
But you take a look at like our it was Farm Credit just put out some great information on it. So like when they took like the last 5-year average, 76% of the farm ground is currently being purchased by active farmers. So they're there. You know, there is a small investor market that's out there. I think it accumulates to about 6% is going into investors. Essentially, the other big market is going to be REITs. I mean, but they're very, very small, and then 1031 money that people are just changing some dollars back and forth. But at the end of the day, 3/4 of that farms are getting bought by farmers, but the investors are there to keep them honest. I mean, a lot of times they're not getting anything bought because you talk about like that emotional tie to that quarter. He doesn't want to drive by it for the next 30 years, so that farmer's going to bid an extra few hundred, $300, $400 an acre more to get that. The investor doesn't drive by that every day, so he's not going to overpay like that. But they're always at those auctions. They're online. I mean, it's not uncommon for us to have an online auction and have 25, 30 people on these online auctions from all over the United States. And a lot of those are investor markets just to happen to see that, hey, maybe Kyle and Dale didn't advertise this real well. Maybe I could sneak in there and kind of get a deal on this today, but.
I always ask the question, I guess Kyle and I talk about it a lot, you know, give me the definition of an investor buyer. Because a lot of us know people that don't farm that come and buy land, but, you know, I own land in Cavalier County, so I'm not a farmer, but if I was gonna buy something, it would be in Cavalier County. So I would be considered an investor buyer, but I'm from there, grew up on the farm, have farmland there. So am I
How do you
kind of a
define it?
quasi
Yeah.
investor farmer as opposed to when I think of an investor buyer, they don't care where it's at, they're looking for the deal. They're looking at the cap rate, they're looking at the return, they're looking at the potential growth of the property as far as what they could sell it for. And I still think that market up in this area in our region in northwest Minnesota, northern South Dakota, and North Dakota is farmer driven.
I'll hinge off what Troy said. There's always pockets. And I can think of a land sale we had about a year ago, and I'll not be specific about it, but it was a very local market and undervalued. I mean, when you're raising 175 to 200 bushel corn, rent should be probably more than $75 an acre, and the land should probably be worth more than 2,500, but that's what the locals were kind of keeping it at. And we had a sale, and some investors with local ties got it going, and it kind of reset the market in that area. You know, at that particular sale, there wasn't a lot of locals. One of the buyers was from South Dakota because he was a farmer, and South Dakota has tended to be stronger. And he came up and bought it, and I think it reset the market in that area. The locals probably saw that happen. It's like, okay, yeah. So when you talk about keeping things honest, it can kind of help stabilize. There are always pockets of some areas are competitive locally, and some aren't. So it kind of helps stabilize some of that influence.
And I like the investor market for what they do to in our area, like down in southeast South Dakota, the investors I work with, they generally buy the poor farm ground. I mean, that's generally their biggest purchase, what they look for. And to be frank, they buy it because their ROI is better on it, simply because farmers are always over willing to pay to get more acres. So you can come into southeast South Dakota, and a really, really nice farm is going to bring you $12,000 an acre, and a really, really poor farm is going to bring you $6,000. They're going to cost you $6,000. Well, the high side is going to cost you $300 an acre to rent the good farm, but farmers are so hungry for land and it's so competitive, they're willing to pay you probably $250 an acre to rent that really poor farm. So the investors are constantly continuing in our area buying the poor farm because they can almost get at least 1.5 points better ROI on it than they can buy the good stuff.
Interesting. Kyle, I think you mentioned earlier that land sales are going on 11 months of the year. Is there a better time for selling land?
I've said this for years, the day after the market goes up, 20%. And I tell this to clients all the time. We can try to pinpoint it, but we never really know till after the fact. Same thing with MODA sale in terms of auction, live and online or just online, whatever. Certainly I've had people tell me, well, you can't have a sale before the harvest is in. Well, the reality is that's not a limiting factor anymore. In the situation we're at today, it's not like 50 years ago before crop insurance where you need, you'd like to From a buyer standpoint, yeah, you'd probably like to put it off as long as you can. But, you know, we can't, the market's changing and fluid. And if you're at a tipping point in the market, you don't want to wait a year. If you want to sell and the market's at or near the peak, we don't know what tomorrow is going to bring. So you probably want to move towards that end sooner rather than later. So, you know, if you're thinking about selling right now, really want to wait till February or March to have the sale, unless you have some specific parameter that you're dealing with. But in terms of achieving your goals and getting a fair price for your land, I think you want to move towards that end sooner rather than later. So that's the change. And the online part helps you facilitate that. If it's a storm that day, if the weather is conducive and people are out harvesting, it's not prohibitive for them participating in bidding on that land.
Talk a lot about,
Don, I think it's going to be interesting. We got a really big sugar beet crop out there from what we're hearing right from the pre-harvest. And we have a really strong final payment for last year's crop. I think it'll be interesting in those areas of the Red River Valley of, you know, the sales right after that last beet payment comes and the initial 2023 payment comes. I think there could be some strong areas. Again, that's that spottiness, you know, throughout the valley.
you guys are involved on stock sales as well. When we talk about American Crystal, at least it seemed to me that we had some business early on and at some pretty lofty levels.
Wow. I mean, you know, I used to work in that area 20 years ago, and I can remember selling shares for less than $1,000 a share, you know, and happy to get them sold. And the recent sale the other day was $5,000 a share. And you have to remember, a share now, I think this year was what, 0.82?
0.84, I think.
0.84 of what they could plant. So that's really strong. That's going to be really interesting to see what the joint venture and limited partnership market will be next year on those.
We've got the number of standing offers at 5,000 too. So it would appear that, I mean, people have accepted that and have to see where it goes from there.
Is that a record?
It's as high as I've ever seen.
I believe the consensus is that it is.
Yep.
You guys have talked a lot about online sales. Obviously, there's a lot of ways to move a piece of ground. When you sit down with someone that's going through this process, how do you strategize? What's the best method that they should be using? Auction, online, whatever the case may be?
You know, every circumstance is different. The people involved, the land involved, where the land is. So we try to look at all those factors. If it's a single piece of land, there's certain neighborhoods where it's just auctions aren't accepted. I mean, really this whole region, North Dakota, Minnesota, auctions weren't done. People didn't even think you'd sell real estate at an auction. They think of machinery. So it's still a relatively new thing here. South Dakota, for example, it's been accepted for years. It's just, that's the way you do it. So you do have pockets certainly where people are reluctant to go to a physical place and bid. Certainly bid against their neighbor and whatnot. So in some cases we
You don't want to see them
determine.
in church if you had a bid against
Yep,
them.
exactly. And I would say the word, and you know, in some of those cases, it's like, well, if I bid on it and get it, and they find out, and they, you know, so be it. But the worst thing is I go to the auction in person, I bid against them, I bid them up, but I don't get it. So A, I've not gotten the land, and B, I take them off for whenever. So there's certain areas where, I mean, we just think an online is going to accomplish anything and everything that perhaps a live auction will. There's other cases where we think live will add, and sometimes we're right, and sometimes, you know, hindsight's 20/20. The other thing, right now when the market's strong and you have multiple tracks, and here again, we even differ within our company. Dale and I would probably lean towards having a live simulcast, but there again, depends on the quality of the land. You know, obviously, good land is going to be more in desire. You know, if it's marginal land, you know, maybe you still do it online. So it's not a one size fits all. And we're not just an auction company, so we don't, you know, it's whatever we think is going to be the best result for the client.
Again, I think it's where you're at, because I mean, when I started working at Farmers National 15 years ago, I started working with Terry Longton back there. We started talking about having auctions, like, that's not how we sell stuff in North Dakota. It's like, I grew up in South Dakota where, I mean, the auctions were at the farm, you pull in the field approach and the auctioneer had the big speaker and 35 pickups showed up and you sold the farm and everyone went home, and that's how it's been done my whole life. But, you know, the online auction was always there, but we were really forced into it, like everybody, into COVID. It's a post-COVID benefit that we have, is that we still needed to sell farms in 2020 and we couldn't get together to do that, so how are we gonna do it? So we went to the online platform and realized, hey, this worked out pretty well. Buyers are realizing, hey, this works out pretty well. No one even knows that I'm bidding anymore. We just had a land auction east of Sioux Falls here last week. We had 16 registered bidders on it. 4 of them are actually in the room. So they're actually acting like they're not paying any attention to the auction, but they're actually sitting on their phone bidding on Nextslot the whole time. So they just didn't want the neighbors to know that they're actually the one bidding in the rooms with it. So they like it that it's anonymous. They can bid privately. No one has to know. They don't have to physically raise their hand in type of a room. But and then when Kyle says we have live auctions, when he's saying live, we're still going to be offering the online component with that. And it's really easy to follow. I mean, you're online. If you're following a simulcast, it'll say floor or online, so you always know where the bids are coming from. But ultimately, it really comes down to the client.
I think that's what sets us apart, Troy, is at the end of the day, we sit down with our client. Because they do have certain desires. There's some that want an auction. There's some that just don't feel like they want to have that big public hoopla, and they want to have a bid sale, or they want to have written bids come in and then bring in the top 5 bidders. So, I mean, you know, every situation is different. I actually have just done recently a one-time sealed bid because of my client. That client wanted particular people that they knew to be able to bid on it. And if those bids aren't acceptable, they're going to probably go to a public venue. But, you know, again, I think it's what sets us apart. Instead of us telling them what they should do, we sit and listen as to what would work best for what they want.
I'm sorry, how recent of a phenomenon is it that we're doing so many of the online sales?
Probably in the last, 5 to 8 years online. You know, and all of us up in this area that are competitive all use the same platform. It's called Nextslot, and it's worked very well. It's something that most anyone can get on there and figure out how to bid on it.
I jumped on you. What were you going to say, Kyle?
I forgot.
It's easy to do when the lights are shining on you. I'm curious, in this region, the FM diversions, what's that doing locally for us?
I think there's probably not as much as we have thought. Maybe perhaps because they have a longer window than a regular 1031. They've got several years. It's had an influence, but you know, honestly, not as much as we thought. I think on the residential side, it's probably had a little bit more of an influence. We've certainly seen rural building sites, and when I say that, it's either unimproved or minimally improved or tear down or something like that. We've seen that previously go from kind of have a ceiling on what 10 acres or 5 acres, whatever might be worth, to kind of going through the roof. So that's been a phenomenon, but it's definitely had an impact, just maybe not, I think, not as much as we would have thought.
You know, I think a lot of that, it was 1033 monies versus 1031. So they had 3 years to spend that money. And honestly, you know, we're far enough into the process, paid a tax.
When we look at back to the rentals type of situation, should we be considering adding tile if we don't have it at this point?
I can speak from an appraiser standpoint. Until maybe very recently, it'd be hard to justify it from a landowner perspective when you look at the cost and when you look at what it might add in value and what your increased rate of return might be. If depends on your age too. If you're 40 or 50, yeah, you'll probably get the benefit out of that. But you know, when you're older, you know, maybe not. Although I would say lately with the run up in overall values, I think we as appraisers can justify more often. And there again, all we can do is use what the market is telling us. Not just an automatic thing where the tile costs 1,000, we add 1,000. We've got to derive that from the market.
We saw sales that we watched yesterday where the non-drain tile portion sold for higher than the drain tile
Yeah.
portion.
You got-
So that throws a loop into our theory there.
Yeah, so-
But again, every sale's different.
Yeah, and certainly in this area, in the valley, when you're talking tile, you're talking pattern tile, so that's an intensive cost. You deal in, maybe in Troy's area, or certainly outside the Red River Valley, you're not talking pattern tile, you're talking selective tile, so the cost of that is not as much. So certainly I see, like Olivia comes to mind, Redwood Falls, clear difference between tiled and untiled that is well beyond what the cost of that tile would be, in part because that tile is only fraction of what it would be here because it's half the ground. It's just the draws and whatever. So it's, as land values go up, I mean, 15 years ago when tiling cost $600 and land was $1,000 to $1,500, it didn't get too many people excited to tile. But when land doubles and triples from that, tile is maybe, somebody just told me it was $1,200 to gravity tile something. Well,
Yeah.
there's enough of a gap there to look at it.
What are you saying in recreational land, hunting ground, those kind of things?
We've seen some astronomical sales in the last year. Now, that's not a wide data set. I would call it prime hunting ground in highly sought after areas that are approaching cropland, in those areas. But
I think it depends how far away from a population center you are.
Yep.
Like when we're suburb of Sioux Falls, if you're within 40 minutes of Sioux Falls and you've got recreational property and it's something that businessman and his son can get out to on a reasonable basis, yeah, it's going to sell extremely well.
One thing I always tell people, because one thing if it's all woods and whatever, so that is what it is. But when you've got farmland and woods, as appraisers, okay, what is it? Is it farm? Is it agricultural? Is that the motivating, or is it recreation? And depending on which one of those you think, it can go in different directions. And I'll cite a sale yesterday as an example of that. There were 3 tracts of land. 2 of them were all or virtually all cropland, and one had about 30 to 40 acres of woods out of the quarter. Okay, so you took the per tillable acre of the 2 others and applied it to the one with woods, you don't have any money left over to allocate to the woods. It's actually what's even lower number per the tillable acre. So what's that tell you? Chances are that was an agricultural buyer, and to them, the woods are not worth anything. So it just kind of depends on those parameters. And where you're at, too. You get in areas, get over towards Bemidji, Bagley, everything's kind of a mix of a lot of stuff, and it just kind of intertwines. It's pointless to try to decipher what's cropland worth, what's hayland worth. It's all kind of just one. So that's a different dynamic. So there again, it's knowing the market in a certain area.
I've heard you reference watching a sale here yesterday or a week ago, those kind of things. To me, it seems like we're on the front end of this, the sales season, and inventory is low. So where do you see this going as far as the sale activity for farm ground?
Well, activity,
The number of listings that our company has company-wide is down. I forget what the number is, but it's about 20% over last year, I believe. Still really strong and kind of comparable to where it was in 21. It's the fall of 21 that this thing started to blow up, and 22 was just an incredible sales year. So we're kind of back to normal, even though it seems like it's less.
Yeah, like Kyle just found out, he pulled some numbers today. We're above our 5-year average, but we're ahead of 21 and 22, So then Farmers National, we're a farm management company as well, as I'm sure most of you guys already know. So when I was a farm manager up until 12 months ago, I had, a lot of clients, maybe just like yourselves, that they were thinking about selling in 2012 and 2013, and down in southeast South Dakota, land brought around $9,000 an acre-ish. So then they missed it, and then land goes back down to about 6, and they spend 8 years sitting there kicking themselves. They're like, I should have sold it, I missed that high. If it ever gets back up even close to that, I'm pulling that trigger. Well, we saw that in 21 and 22, so I had a handful of our managed farms clients that were waiting for a time period to get out, and they all pulled the trigger in the last 12 months. The landowners that we have left with Farmers National Company, I don't see them pulling the trigger on that kind of rate that we've seen here in the last 2 years.
It feels like 2014 done. where we still had some really good land sales early on in early 2014, but commodity prices had dropped pretty good. Rents had kind of come down. Land prices were holding their own early on in 2014, but by the middle part of 2014 into 2015, they had taken that 15 to 20% drop. And it just has that feel of that right now. But again, watching sales this week, and I'm in certain areas, I'm saying, well, maybe I'm wrong because they're as strong as they have been, but they were good quality parcels.
I think the difference, I've said this before, difference between now and that uptick is that the previous big uptick before that was, everyone talked about the 80s and what happened and the crash and whatever. So I think in hindsight, I think in 14 and 15, there was a standing on the sidelines. What, are the values going to get cut in half again? And once time proved that that wasn't going to happen, there was an adjustment. That you can probably give crop insurance a credit for helping to stabilize that. Seems like people were back in, and I think that being fairly recent history, that's what it'll give people more confidence going forward.
Farmers National is a national company, obviously. Do you see different trends? And I know, Troy, you talked about Northwest Iowa, but do you see different trends of what's happening in the Eastern Corn Belt versus the Western Corn Belt versus Northern Plains? Are there different trends with land values?
Corporately wise, I think we're pretty much the same. We're seeing that little bit of softening, I want to say softening because obviously there's markets that's not, but I mean, if you talk to like Paul Shadig, our real estate manager, he'd tell you that he sees us down probably around that 5 to 7%, across the board, listings being down maybe 10%. And I think that's going to be pretty common across the Midwest.
I think last spring, I want to say, when talking to our auctioneers and whatnot in Iowa, where they'd seen the $20,000 an acre sale, and then the interest rates was seemingly starting to be a factor, although we didn't necessarily see it. They felt it started to be, I think, correct me if I'm wrong, Troy, but maybe a factor because you're just talking that much more money, dollars.
And I think the only thing difference is that is we're finding like in like the Western Dakotas is that, our grass prices are really still strong. I mean, the cattle economies have been good for a few years. Those producers are making some money. A lot of demand for grass.
Makes sense. We talked earlier about American Crystal. You guys handle ag stock there. There's other kind of ag stock with, I think in the ethanol plants, what's happening in those kind of markets?
Ethanol, I think one that we trade a lot of is Red Trail in Richardson, I believe. I believe the price level and the activity has been extremely strong, although now there's just not shares for sale. So, I mean, there's demand there, there's just not supply. Another one is Golden Growers in Wahpeton. I think we have a lot of activity there again. I think it's been trading at or near an all-time high. Strong activity. But yeah, right now the supply is not there.
So if some of these folks in the audience have some land that they're thinking about selling, what's the process? How do you work with them?
We encourage them to come in and visit because I want to get to know you as a seller. You're not just another transaction for me. I want to know what your goals are and what you want to do with your sale. And that's really important to me. Then we can sit down and go over the best methods of sale and get it set up so that you feel really comfortable that day that auction or that bid sale happens, that you knew that you got the top dollar you could for that parcel on that particular day.
We asked at the top, have we peaked on this farmland? As we talk here, chaotic, I remember being the word you said, but what do you think?
I think the bloom is off the rose, but that's just.
I'm writing that down, that's it.
But that doesn't mean, like I said, it's gonna be dependent on areas. That doesn't mean the market's gonna go south by any means. We might have a little corrections in areas where there's been a lot for sale and so forth. Anytime the market gets strong, the marginal land probably goes up more than it should perhaps, and when it corrects, that's usually the first thing that you see a weakness in. So we're gonna see some of that. But, you know, I don't think you're gonna see, you know, would we see 25 to, I mean, we could say some sales were up over 50%, and I just don't see that happening unless it's a sale in an area with a void, like what Dale mentioned, just extreme pent-up demand. So, but I think, you know, you know, when we give expectations, we try to be realistic, and I think we're gonna be more at or near those expectations, hopefully, than far exceeding them like we have in some cases, in my opinion.
I think one important thing is to give yourself time, if you are considering selling a property, give yourself time to market that property. It does take time, I mean, from start to finish. By the time Dale talks about sit down and mid-operation, give you time to think about it. You know, we generally tell people it takes probably around 6 weeks by the time that process starts, because give yourself ample time to have that out in the market, have flyers out, maybe you could have some radio advertisements, send postcards. Just give yourself some time to make sure you take advantage of that advertising window. So if interest rates are up, and maybe take some of these growers an extra week or two to get their financing approved from banks. So give it adequate time in the market. I think it'll be your best chance.
You can advertise on radio too, that works right
Yeah.
as well.
Maybe WNX on the
Got to get my pitch in. Any other final thoughts, guys? Where are you guys located here at the show?
We are in the livestock building, just a couple doors down from here. Come over and see us.
Folks a lot of times have questions they want to do on a one-to-one basis. You guys being around a bit if they catch you
absolutely.
outside? Good deal. Again, it's always interesting to have this conversation. Things change from year to year as we talk about what's happening in this land market and farm rents and all those kind of things. We always appreciate the insight. Again, our thanks to Kyle Nelson, Dale Weston, and Troy Swee with us from Farmers National Company. Please show your appreciation. And again,